Welcome back, everyone. This is Van Richards, and we've reached the final video in our series on the American Century Ultra Fund. Now, today we're going to discuss some potential drawbacks of this fund, and I'm going to provide you with some closing thoughts that will hopefully help you to make more informed decisions on your own. Please stay tuned for important disclosure information at the conclusion of this episode. Now, let's dive into some of the key drawbacks that you need to consider. Let's begin with higher volatility. You see, this fund has shown higher volatility compared to both its benchmark and its category. What this means for you is that you might experience more significant fluctuations in your investment value. Then there is sector concentration risk. You see, this fund focuses on technology and consumer cyclical sectors, and it can lead to increased volatility, especially when these sectors face challenges. Then there is the potential for key person risk. The upcoming retirement of co-lead manager Michael Lee could impact the fund's performance despite the fund's process for handling personnel changes. Misperception of strategy. You see, some investors might mistakenly view this as an index fund due to its decreasing active shares. However, with only 60 to 90 stocks, this is still very much an actively managed mutual fund. Then there are tax considerations. The fund's high potential capital gains exposure of about 68% could lead to significant tax implications, especially in market downturns. Now, this is particularly relevant for taxable accounts. As we wrap up this series, let's go back and recap some key points about the American Century Ultra Fund. You see, it is a large growth fund focusing on companies with accelerating earnings growth. It has delivered some strong term performance relative to its peers. The expense ratio is below the average for its category, but it's not the lowest available. It's more suitable for investors with a higher risk tolerance and a longer investment horizon. Remember that there's no single fund that's going to be right for everybody. Now, the key is to understand your own financial goals, your risk tolerances, and how a fund like the American Century Ultra might fit into your overall investment strategy. Now, if you found this series valuable and you want to dive deeper into understanding and managing your retirement investments, well, then I invite you to check out my online course at planpickprofit.com. In that course, we explore these concepts in much greater detail, helping you to develop the skills to analyze funds and make informed decisions about your own retirement planning. Remember, always read the fund's prospectus before you invest any money. Now, I do want to thank you for joining me in this educational series about the American Century Ultra Fund. I really hope that you found it informative and helpful in your investment journey. I'd like to thank you very much for watching, and here's to making informed decisions on your own.
Important disclosure information. This publication or presentation is for educational and informational purposes only and should not be considered investment advice. Opinions expressed are as of the date of the publication or presentation. Such views are subject to change. Richards Financial Planning does not guarantee the accuracy or completeness of the data presented herein. Van Richards is a managing member of Richards Financial Planning, LLC. Richards Financial Planning, LLC is registered with the Texas State Board of Securities and governed by that entity and the U.S. Securities and Exchange Commission. Richards Financial Planning, LLC shall not be responsible for trading decisions, damages, or other losses resulting from or related to the information, data analysis, opinions, or their use. The securities quotes, charts, articles, or other statements regarding the market or additional financial information are obtained from our suppliers' sources, and we believe it to be reliable. However, we do not warrant or guarantee the timeliness or accuracy of this information. Our company, our employees, our information providers, guests, or affiliates are not responsible for damages or liable for any errors or inaccuracies related to this publication or presentation. Past performance is not a guarantee of future results. All investments are subject to investment risk, including possible loss of principal. Individuals or other operational entities should consider if an investment or strategy is suitable for them by referencing their financial position, investment objectives, and risk profile before making any investment decision. The views and opinions of guests that may appear or be sourced with this publication or presentation are not necessarily those of Richards Financial Planning, LLC, and affiliates. Richards Financial Planning, LLC, and affiliates are not associated with the guest and their affiliates unless otherwise stated. Throughout our presentations, we may mention related educational products or services, such as online courses or additional resources. These mentions are intended to provide viewers with optional, in-depth learning opportunities related to the topics discussed. The availability of these products does not affect the objectivity of the information presented, and viewers are under no obligation to purchase any mentioned products or services.